Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's today's second video take a look at the Great British Pound, just because gold market is closed today, so it makes no sense to take a look at right now. We discussed in the weekly report as usual, with the non-farm payrolls already in our pockets, and we will know what numbers will be. But on the Great British Pound there are a few interesting moments. Since we take a look relatively rare on this currency, we involve also consideration of monthly and weekly chart. So on monthly chart on Great British Pound, picture is very similar to the euro. So market is not at ever bad, trend stands bullish. The only difference is that if euro currency right now stands below these previous tops, Great British Pound stands above it, or at least in April it has made the new top right there. And this is most tricky moment in general in the overall situation. Mostly because we suggest, and many respectable traders and authorities confirm our view, although our suggestion is not based on a particular opinion of these authorities. Our opinion comes from the fundamental background. But in general, as a Fed representative such as a Bullard, Clayster, they confirm our view that rates should be raised above the 5%. As a BlackRock, another big funds and big banks tells that Fed will not decrease the rate, and the markets are wrong with the anticipation of the Fed policy as a fast turning to the dovish position. This has vital meaning for performance of the Great British Pound. So on the monthly chart we also should keep in mind this level. 27.62 is a major, one of the major 618 resistance level, so which market stands actually relatively close. If you take a look at the weekly chart, you will see that market currently is challenging 24.53 resistance. We already talked about this, and it also struggling with the overbought on the weekly chart. It means that market can't move significantly higher in excess of the overbought position, and this performance on the Great British Pound mostly stands in relation to anticipating weakness in United States dollar. This comment is some kind of the rebalancing on the relative value of the currencies with the anticipation of the more dovish policy from the Fed. You could see this process on the euro, and you could see this process on the Great British Pound right now. Besides, in United Kingdom, as you know, the overall situation with the inflation stands a bit worse than in the United States. It's anticipating some more aggressive policy from the Bank of England, and it also brings some support to the hawkish and strong performance here on the Great British Pound. At the same time, technical picture with this possession near the overbought, and as we suggest that markets are wrong with the anticipation of the dovish turn from the Fed, that creates interesting background that might be with the spike up, it might be some kind of the wash and rinse of this previous consolidation, and it means that market hardly will proceed slightly higher. At least in the nearest term, we could use this area around 25.30, maybe 26 as a sale for upside performance. So market hardly will move significantly higher. That's what we could say from the weekly chart, and you can see here is also market is trying to pass through it even without the overbought and return rate back down below the level. So level currently works nice. So it was first test of the level, second, now third test coming here. And the problem with the breakout is it becomes more complex just because of the existence here of the weekly overbought. So chances on immediate upward breakout and fast acceleration is not really strong. It means that it creates an interesting background for possible signs of weakness here and possible bearish context that we could see, but other traders maybe will not see. So on lower time frame on the daily chart, You remember our flag consolidation that we saw, we discussed. We talked about this ABCD trading inside of it. And take a look here. We have few targets. First target stands 26.23, which is the ABCD. Sorry, this is 127 extension of this most recent swing. It's 127. 1618 stands 28.46, and daily XOP stands 27.62. This target, this XOP, perfectly agrees with the monthly resistance area. So if it will be completed, this will be agreement resistance, right, to the major monthly resistance level. And it's also might be very strong. So that range between 25.50 to 27.50 is an area where we could keep an eye on the possible bearish signs. Currently, we do not have it. So market's still trying to move higher and forming some gradual, not very strong action. But that's an area that we need to keep an eye on. So on the 4-hour time frame chart, we have this ABCD pattern and its XOP around 26.60, which is perfectly agrees with the extension of this leg. It means that potentially, who knows, we could start getting the head and shoulders right there, right? So some patterns, we could start getting 3 drive, for example. So if market will form the first drive, this will be second. With some pullback here, market could start moving to the major resistance 27.16, forming third drive, and that might be the background for possible downward action. So one of the things that we need to say here, actually would like to say, is that with the current performance, and if you trade on high time frames, I mean on a weekly, on a daily chart, it is a bit tricky and risky to consider the chances for taking the long position in this range. So in the current circumstances, on the daily chart, I would prefer to start searching and watching for possible signs of weakness on Great British Pound right now in this area. Of course, it will not happen immediately. Market has, well, pretty lots of room for fluctuations around this level, but just keeping all this stuff in mind, you will be easy to control the situation, and when the first signs of weakness, you just recall what we have talked about this, and you will be much easier to get the direction, to get the warning signs from the market that maybe it is turning down. So once the market starts recognize the a bit mistake with the assessment of the Fed policy, the market starts to come very closer to this moment, well, the more evident probably reaction will be on the markets as well. Currently, it is not seen yet. So that's what we have currently on the Great British Pound. Right at this moment, we do not have any bearish signs. We even could suggest it's the same as in the euro. We have discussed that market indeed could try to go higher, at least to complete this XOP around 26.60, and even on the hourly chart, you could see that we have a kind of the flag consolidation, which mostly looks like the bullish continuation rather than bearish, especially after this type of action, right? It's definitely could happen, but at the same time, in an area around closer to the 26 area, 26.50, that's maybe more and more interesting signs could appear, and our task is not missing.